Welcome to the Creating Wealth Simplified podcast. My name is Lauren Wells, here with my co-host, Chris Seveny. We're committed to providing you with the knowledge required to build wealth through real estate investing. Tired of consuming content about real estate? Stuck in analysis paralysis? Ready to do your first deal? As a member of our community, you will learn how to go from consuming content to taking that first step into the world of real estate investing. Our show is not about getting rich quick, but about providing you with the knowledge you need to take action. Join us as we speak with experienced investors who share action tips on how to escape the corporate world, start a thriving side hustle in the world of real estate, and go beyond your W-2 or 401k. Welcome, everyone, to the Creating Wealth Simplified podcast, where each week we bring you education and information that will help you take your next step in building wealth through real estate. My name is Lauren Wells, and I am here with my co-host, Chris Seveny, and our special guest today, Adam Gamboa. Now, Adam is the CEO of AE Lending Solutions, which provides professional athletes and entertainers with custom and traditional lending. Prior to starting AE Lending Solutions, Adam was a top producing private banker at various financial institutions, including JP Morgan Chase, Wells Fargo, California Bank and Trust, and PNC. Before getting started in the banking industry, Adam played poker professionally, playing at various poker events in multiple countries. So with that, welcome, Adam. Happy to have you here today.
Thanks for having me. I'm excited.
Yeah, I'm excited to have you. Now, you and I met through a mutual friend who introduced me to AE Lending Solutions. And I know you and I have worked together on a few loans, but why don't you go ahead and introduce yourself a little bit? I kind of gave, the bullet points, but yeah, tell us a little bit about what you do at AE Lending Solutions.
First, want to know if you played in the World Series of Poker and how you do. That's what I want to know first.
Yeah, well, I did play in the World Series of Poker. I played several times. I didn't do anything that exciting in the World Series. I had a couple cashes, but nothing major. I didn't win any bracelets or anything like that. At the time when I was playing professionally, I was really young. I started playing at 18 years old online. And so the bulk of what I was doing was online. And then I would travel for the bigger events, right? Like I played in Australia, and there's an event called the Aussie Millions over there. And back in whatever year that was, they ended up shutting down online poker. And this was after I'd actually dropped out of school because I was playing professionally. And I was like, shoot, what do I do now? I could travel and just play live tournaments all the time, which was not really my thing. I didn't really enjoy sitting in a casino for 14 hours a day, but I was really good at math and just kind of naturally good at it. And so I had to decide, do I go back to the real world and get a job? And so that's kind of how I ended up in the financial industry.
Wow. And so you went first into private banking, and how was that?
So what happened was my poker career ended, or I decided it was going to end. I wasn't going to continue anymore. And I was like, okay, well, what do I do now? I had savings built up, but I dropped out of school. I had no real plan. And I had a friend at the time that was working for New York Life, an insurance company. He said, hey, if you come and work for us, it's commission only, so you won't earn a salary. But if you sell enough life insurance, we will pay for you to get your investment licenses. So if you get like their President's Club tier.
Yeah.
And so I was 23 years old, I want to say. And at that time, nobody that I knew wanted or needed life insurance. So the only way I was going to succeed was by cold calling. So I was cold calling 200 people a day, trying to sell them life insurance, which I actually got really good at cold calling. It's what helped me in my banking career. But I ended up hitting President's Club. I was able to get investment licenses. And when that happened, this was right around the time when private banking was really becoming popular with banks. It was big in Europe and then with the super ultra high net worth in America, but they really didn't offer it to the masses, the typical $5 million type of banking client. And so it was getting popular, and that's when people started calling me because of my licenses saying, hey, we've got these banking spots open, but you need to have investment credentials as well. And I took a job with JP Morgan Chase, kind of worked up through the ranks, learning all about banking. I mean, I really had very little background in lending in general, but that's kind of where my skills really, in my opinion, set me apart with the other bankers, that and the fact that I would cold call anybody under the sun after doing it for so long. And through private banking, I just kept getting better and better, got more experience. My network kept growing. And then next thing you know, I was getting those golden handcuffs, is what we call them in private banking, where you're like, okay, like, is this what I do forever now? It was almost like hard to leave. Like, well, if I leave, I don't get this bonus. And if I stay, it was a whole thing.
Yeah, I had those in software as well. I feel like the golden handcuffs are a real thing.
They are.
Okay, so how did AE Lending Solutions, how was that born? Because what you do,
Yeah.
and you can explain a little bit more, is like pretty niche, I would say. And yeah, how did you get into that?
So what happened, I was in private banking, and I think I have probably a similar mindset to you guys where I was trying to figure out, how do I build wealth? How do I escape the rat race? And
Yeah.
through that process, my answer was, okay, it's probably real estate, but it wasn't happening fast enough for me. I was saving money, buying a property and whatever, but to make sure that I wasn't bored and desperate to quit my job, I tried to figure out a way that I could actually enjoy it. And that was my answer to that was finding an industry of people that I find interesting and I actually want to work with, which at the time was professional sports and professional athletes. And so using my cold calling skills that I mentioned earlier, I started cold calling people in that industry, which if you know anything about that industry, it's very velvet rope. If you're not on the side of the rope, no one will give you the time of day. But called enough people and eventually had a few people give me a shot at helping their clients. And from those few referrals, it just continued to grow. So this might be too much detail, but within banking, every bank has their sandbox, so to speak, of the types of loans they like to do. And if it doesn't fit inside that box, they don't want to do it. And so I would get a lot of requests, and I didn't want these requests to turn off, like, oh, Adam can only do X, Y, and Z. So I would call around to other banks and find a home for these particular loan requests I was getting from the agents or business managers.
Yeah.
And with that, that turned me into sort of the first call for a handful of people in that space I had connected with. And it got to the point where they started asking me, hey, I know it's going through another bank. Can you just handle it for us anyways? Because we trust that you'll get it done. And at that point, I was already thinking about how do I monetize my connections in this industry and my knowledge of lending and figure this out. And that kind of gave me the confidence to break away from the bank. But it was probably about 6 months where I was managing both, just bootstrapping the business, handling that all. I really had to optimize my day from sun up to sundown because banking was a full-time job. I still had to show up to meetings and still had to meet with clients. And so it was a challenge, but that's sort of how I got into that space. And then I transitioned once the business was making more part-time really than I was even as a banker.
Awesome. And so many points I want to make there because I know you are a dad of, I don't know how long ago this was, but I know you're a dad of 2 boys. So just like, again, showing people that like you were doing both jobs or you were doing both, also being a dad and of 2 boys because they are wild. I have 2 boys myself. So that's awesome. And then how many cold calls do you think you made or how long did it take you to really get through to that other side of the velvet rope, so to speak?
Ooh, it was a while. It was probably about 9 months to a year where I would make calls and emails and follow up with people. And I would get through to some people. And it was kind of like, yeah, okay, like, thanks for calling, but it took me continuing to drip on them and follow up with them to the point where I just happened to make that call that day. We're like, you know what? This guy just got a loan decline. Can you figure this out?
Yeah.
And so there was a lot of perseverance to get to that point. And once you kind of know one person and then they vouch for you with somebody else, it just took off. And then to take it a step further, once I left the bank, my network in that space grew exponentially, which I wasn't expecting. But because I was now the guy that could do anything, it just everybody was referring to me.
That's awesome. I think that's such a good testament. Like 9 months is a long time. Like I come from a sales background where you're cold calling and 9 months of cold calling to get through, like good for you.
Yeah, it wasn't easy.
No. And I think that, again, I'm going to probably consistently say this probably every episode. Like that is not something people talk about is that actual persistence. People say you have to be consistent, you have to be persistent, but like to quantify that as 9 months of cold calling, if anyone listening doesn't know what that's like, it's brutal.
Yeah, there's no instant gratification. You got to constantly remind yourself that like I'm taking the necessary action that is going to pay off in the future, even though I don't know what it's going to look like in the future. It's just, you got to keep pushing.
What was your first deal?
The first referral I got was an NBA player that had a contract that only had a year and a half left on it, and he needed money. And so I had my bank take collateral of his contract to issue him a short-term loan. And that's actually one of our bigger niches is we do something called contract lending, which I shouldn't say nobody knows how to do it, but it's not something that's easily accessed by the masses, right? Like if let's say you signed a contract for your podcast, your first thought might not be, how do I get loans based on solely this contract? Mm-hmm. And a lot of people don't know that exists. And then on the flip side, a lot of bankers don't really know how to help their bank take collateral of those contracts. And once I learned how to do that, that was a space that really took off
Yeah.
this.
So you connected with so you had the people who needed the loans. How did you find people to fund the loans?
So I was in banking for roughly 10 years, and I worked for multiple banks. And a lot of bankers hop around. I'd say roughly every 5 years, it seems like bankers take another signing bonus or something with a new bank. And so I had a pretty big network of bankers to begin with. And through that process, when I was saying that I wanted to make sure I was that first phone call, I was essentially cold calling banks and bankers to find out what they could do. And I actually, at the beginning of the business, calling bankers with like mock scenarios, right? Like, hey, I've got this client that needs X, Y, and Z. Can you do this? And then they would tell me yes or no, and I'd make notes. Hey, this guy at this bank can do these types of loans, right?
Yeah.
And with my experience, I knew the right questions to ask to make sure, even though they were telling me they could do it, that they could actually deliver and fund those loans. And then on the flip side, kind of what you mentioned earlier, is we do private lending, private notes, I would call them. And I actually didn't part of the business, but it just sort of developed. And with that, I had a lot of connections being in private banking with a lot of wealthy people who invested in various things. And once I had those set up and knew exactly how I wanted to structure them and underwrite them, I was able to go to those people and say, hey, here's a 12% return in 6 months. Are you guys interested? And I built that network out as well.
Yeah. Chris, do you have a question? I think you had a question.
No, I'm just like absorbing all of this. I'm thinking like you must have a rock star attorney to figure out how you can collateralize contracts. That must have been very interesting. And I'm also curious, based on that, have you had to consistently modify your agreement because there was like a gotcha in a certain situation where something turned to the worst or something didn't work out?
Yeah, that's a good question. So I do have a really great lawyer that I like working with, number one. And number two is very honest and very good at what she does. That was my big fear when I was first leaving my job. Like Lauren said, I had 2 kids, right? My youngest son was 1 year old. And so I was like, I can't mess this up and get sued for something silly or break a law, whatever the case may be. And so speaking to the taking a contract of collateral, it's actually fairly simple. Have you guys heard of filing a UCC?
Yep.
UCC one filing with state? Yeah. So it's essentially as simple as that, but calling out very specific things, referencing the specific title of the contract, the date of the contract, and essentially the income derived from the contract. But there are certain ways of structuring that loan to make it additionally secure for the lender, particularly for banks, where we'll have insurance taken out on the athlete a lot of times to pay off the bank in the event of they get kicked out of the league, their contract gets violated for some reason. And then for me personally, our service agreement actually has been pretty airtight since day one. We haven't really had any issues with it. I'm set up as a consultant. So different from a lending broker. We operate similar to what a broker would, but we don't get paid by the banks. So when I take a $5 million loan to a bank, they're not kicking me back anything. I'm not putting my points on their closing statement. My agreement is specifically with the borrower, and they pay me at closing outside of the transaction. And what that allows me to do is put all of my interest aligning with the borrower, not because X, Y, or Z bank is going to pay me a fee. And it also allows me to go to any bank I want or any lender I want to fund this loan without a restriction.
So for people listening, can you give us an example of what one of your loans looks like? Like, what's the typical length? Who are the people that are funding these loans? And like, why would someone want to, myself, I know we funded a few loans. Why would someone want to fund these loans versus like another type of investment? I look at this as an investment.
Sure. I look at it from like, how's a guy who's probably making $5 million a year, on his contract, need a short-term loan.
Yeah, I think that was one of my first questions when we were introduced. I was like, they're making a lot of money. Why do they need a loan from me, little old me?
That's a very common question we get. It's like, why do these professional athletes need loans? And to answer that question in general, there's a wide range of reasons. It could be something as very specific and creative as, hey, they're trying to take a private equity stake in a company and their business manager is business savvy and says, hey, you should use somebody else's money to facilitate that, right? Have you use smart leverage, smart debt. It could be as simple as they want a mortgage to buy a house, and maybe that player is 20 years old. Even though his contract is $5 million, he's only earning that $100,000 at a time every month, whatever it may be, and they want to buy a $5 million house. Well, easiest way to do that is usually going to be to finance the majority of it. And then to the point of why are they borrowing from private investors? Well, let's say we have a 19-year-old kid who just gets drafted to the NBA. They have no credit yet. They may come from a background where they have no financial education. No one's ever told them about getting a credit card or anything like that. and they say, you know what, I just got drafted. I know I have this money coming. I signed my deal in June. I don't get my first paycheck till October, but I really want to get my mom out of the living situation she's in. I want to put her in a house, or, I've had this dream of buying my own house or buying a car, whatever the case is. There's a million different reasons why they might want the money. Sometimes it's to pay off debt they took as high-end prospects. There's a lot of people who offer money and prey on these type of people, and they're paying 30% on private money just so they can train at nice facilities. So whatever the reason might be, I mean, there's so many different options and so many different types of requests that we see. Mm-hmm. And to answer the question of why would somebody want to fund this? Well, usually it's a very short-term note with a very high return. So I would say the average return we see on these notes is probably around 15%, and the average term length we said is probably about 6 months. Because it's usually not lending money to somebody who can't afford something. It's somebody who has maybe a timing or a cash flow situation. As in, I signed a contract here, I don't get paid for 4 or 5 months, but I really want this thing now. And so we'll help facilitate that. And the clients are more than happy to pay what is probably considered a very high interest rate to most people, pay that interest when it's getting them something they've desired for a long time or something that they've really been striving to, and that in the long run, it's not going to be that much money to them, essentially. Does that answer your question?
Yeah.
No, it does. And I've read in the past that most professional athletes, they don't get paid during the off season. Like NFL players only get paid during the season. So come basically, certain parts of the year, they're not getting their money coming in. Like you said, they could have it tied up in another investment. That deal comes through that they might have some cash, but hey, why not leverage it? That's what most people are taught, is use other people's money if you can. And make that much, if you're a high net worth individual, the difference between 10 and 15% on loan is probably inconsequential in the grand scheme of things.
Exactly. Yeah, that's the other nice thing about the way that we do loans, specifically when they're tied to contracts, is we can customize them any way we want, especially if we're going the private route. Mm-hmm. So we'll give the player no payments due through the off season. You can repay us with a particular signing bonus you're getting, or we'll negotiate that you have interest only during the off season and fully amortizing payments for the remaining 9 months of the contract or the loan. So we can be really flexible with that. We do that with banks as well.
So your lenders can be both banks and individual private money.
Correct. Yeah. So we use everything from a really big bank like JP Morgan to really small banks you guys probably have never heard of, like Wilmington Savings Bank and Susser Bank of Texas. So these really small regional banks facilitate loans for us too. It depends on the situation, because a lot of times we'll fund, let's say, a contract loan for a player who doesn't have credit yet, very little financial experience. And so the big banks don't really want to take that risk or touch them yet. But the smaller banks know that the way that we structure them with insurance and the repayment schedules we do, that they're very secure. Like, we, knock on wood, but since we've been doing this, we haven't had any player default on any of their loans. And I can kind of dive in, if you'd like, to a sample of how we would structure that with a bank to make it really secure. So
I think that was I don't know if you were going to get into this, but I think one of my questions when we were working together was, well, what happens if this player who is him being signed or re-signed is what is going to pay our loan? What happens if he gets hurt? So how do you mitigate that?
Yeah. So there's a couple things. Number one, we always want to have a backup repayment source. So we try not to issue a loan in an instance where, like we talked about, someone's in dire need of this money, and without it, the rest of their finances are going to fail. We try to issue to people who have, like we said, maybe a shortfall for timing or another aspect. But the way that we structure it is, number one, we're going to take collateral of something very important to them, which, again, usually it's their, let's say, NBA, NFL, MLB contract. Number two, we're going to make sure that whatever we're taking collateral of has a guaranteed portion of it. So some instances in the NFL, their contracts are not guaranteed. And if that's the case, we're very upfront with the investors on that. There's no guarantees. This player could get cut. And with that will come an increased return for that lender. So on top of that, we're going to make sure they have secondary sources of repayment, whether it's sponsorship money, savings already, an investment portfolio, maybe real estate, something like that we know we can go after in the event of default.
Mm-hmm.
We then typically will have the players get what's called DDD insurance, in sense for disgrace, dishonor, and death. And so what that really covers is, let's say the player passes away, obviously that covers death. disgrace is a big one. This is, the player tweets something offensive. Yeah, the player tweets something offensive. He goes to jail for some reason, gets in a fight with with somebody else in the league and gets suspended for a number of games. And that insurance will kick in if they miss a certain number of games. And so that guaranteed portion is huge, because if they have a guarantee where they're going to pay, let's say, get paid out $10 million this year, well, now I can get an insurer to say, if he misses X amount of games, then we will step in and pay off the lender. Well, let's say he doesn't miss 40 games, he only misses 25. Well, then we've underwritten it to how much does he get paid over this specific amount of games that he can miss without the insurance kicking in. And if we can underwrite to that guideline, we're covered in both instances, right? Mm-hmm. And then the third thing is we do things like we make a player sign an agreement that says, in the event of default, you authorize us to go directly to your professional sports league and request that they assign direct deposits to us or to our lender, which is kind of unique. But signing that, I think, for a lot of these kids really hits home. Like, oh, if I don't pay this, like, you're going after my paycheck. And I'm signing saying, yes, someone can hand it over to you. With banks, we'll often have them do an interest reserve covenant where we say, hey, we're setting aside this $60,000 to make sure that on-time payments are always going to be made through the off season. We also, a lot of times, will have them set up a deposit relationship with the lender. And then, of course, if it's a private lender, there's a few of those things are going to be missing, right? There's no deposit relationship set up, but we still try to mitigate as much as we can. And in our UCC filing, it's very detailed to where we call out not only the contract, but all of his assets now or in the future. We list the most common things like artwork, jewelry, vehicles, homes, any other sponsorship contracts. And so we know that if in the event of default, once we win that claim in court, hey, we have this promissory note, we can go garnish his wages or go take collateral of that house or whatever it is. We have a claim to stake against it.
Lenders, the lender's responsible for collecting the payments, or how does the servicing of the loans take place?
No, unfortunately for the private loans, I'm doing all that servicing myself, which is not something I really enjoy doing. I think Lauren and I might have talked about this briefly. Yeah, I know, right? Right now, what I do is very, like she said, it's really unique. There's not a lot of people doing it. So there's a lot of aspects I don't feel comfortable handing over yet, because I don't know that everybody fully understands, why isn't a payment being collected this month? Why are 2 payments being collected the following? There's so many different unique circumstances because it's so customized. Mm-hmm. I'm afraid to hand that off. And then on the lending side, on the banking side, when we have an institution as the lender, they're going to service that loan for the most part, but we still stay involved. So we have a process that once we book a loan with a particular lender, we make sure that athlete, entertainer, whoever it is, or their business management team, financial advisor, has access to the online banking setup. They have access to getting what they need to being set statements. And we also have a set follow-up where we make sure that that first payment's getting made, that second payment's being made. We stay in touch if we know that this player should probably refinance at this point to pay off that lender. We track all that data. And then we also have very good relationships with the lenders we use, because we're sending out so many loans that if something isn't going right, or, hey, this guy's 2 days away from his payment being due, we haven't heard from him, they're going to call me often enough, and I'll reach out to the business manager and make sure it gets handled.
How many loans do you do a year?
Good question. It keeps going up. So when I first started, when we were first really going full time, I quit the job. We were probably averaging about somewhere between 4 and 6 a month. Now we're doing, on average, I'd say probably about 12 a month, and some months maybe up to 16 to 20, which it might not sound like that many, but it's very.
What's your annual volume, roughly?
Yeah. So, you mean dollar amount?
Yeah.
We're probably closing north of 20 million a month in loans.
Awesome. 250 million a year. That's a good amount.
Yeah.
Yeah. And so most bankers that we deal with, we have good relationships with, because we're a lot of times making their year. If someone is doing a really good job and we know this mortgage is going to work for them, they know we only bring them loans that are going to get done because I've underwritten it myself and I already know what the hurdles are, what the guidelines are. And I'm telling you, hey, this loan works. All you have to do is, stick it through your banking machine and you're going to get a bonus at the end of the quarter.
Those bankers are really happy they're connected to you.
Yeah.
How many of the loans that you do would you say go banking, are underwritten by a bank versus a private lender or private money?
I'd say right now it's somewhere between 20 and 25% are going the private route.
Okay.
The rest are going through institutions, and that could be through a large bank. It could be through a mortgage brokerage firm if they have a really unique product. But I'd say it's probably maybe if we're doing 20 a month, let's say 4 to 5 a month are going to be private.
Okay.
Wow, this is just like, has me my brain spinning in 1,000 directions. No, because it's just interesting. I mean, it's just, what I love about it is it's a niche industry, a niche market that you basically took a large amount of risk on and basically were cold calling literally for 9 months, which I can only imagine because I know Lauren, after 3 days of phone calls, if she's not getting results from people, gets upset. So for 9 months, man, I would be in a psychiatric ward.
Yeah, that's patience. Like that is patience and persistence. And I feel like people typically have one or the other, or, like patience isn't my strong suit. So I am super persistent. But even for me, 9 months of that's a lot. Like I'm super impressed by that. Like as someone, again, who's made a ton of cold calls in my career, that's impressive.
Thanks. Yeah, I must love punishment.
Yeah.
I love being told to F off over the phone.
Yeah, or you just saw the vision. You knew that it was there and you just needed to break through. So again, that's awesome. How do people from not private money, how do they find you? How do they hear about you? Like I know we were connected through a mutual friend that I went to high school with, which is like so random, but is that typically how it works? Like how do people find you?
On the borrower side or on the investor side?
On the investor side.
On the investor side. So initially it started with me using my private banking network. There was a lot of clients I was really close to that I've been working with for years. And I first started going to them and funding deals myself, which got, even to this day, my wife will tell you, like, where's all of our money? I'm like, well, all these other people have it. But, it started off with that. I was funding them myself. I was going to a lot of the contacts I had already had that I knew liked to invest in various things. And from there, it just kind of continued to grow, right? It was
word of mouth.
Maybe this person funded a deal for me already, but hey, I have a friend that actually would love to fund this for you. And, so just like how we met, right? So I got introduced through the person that referred you, and he did a loan with us. And I think he had a pretty good experience. And then he told you about it, and it kind of grew from there.
That's awesome. How long ago was AE Lending Solutions founded? Like how many years in your business?
Little over 3 years now.
Okay. And so you started right before essentially COVID. So did you see any, did that impact your business at all? Like, have you seen with the stock market crashing more people from like the private lending route coming and being like, hey, I'm looking for an alternative to having my money sitting in the stock market?
I actually made things a little more difficult on the private side because what was happening was, we had that initial crash when COVID hit. Yep. And then right after that, everything started ramping up and we had the massive inflation and every tech stock just kept going vertical, right? And so I was coming to people like, hey, this investment works. I don't want to say it's guaranteed, but it's a very secure 15%, right? Which 5 years ago, people were like, oh, 15%, like sign me up all day. But everybody else was getting like 20% a quarter investing in AMC stock or dabbling on Robinhood now at this point because everything was just going one direction. So for a while there, it was getting tough, which is luckily the business was successful. And I ended up funding, again, more loans than I wanted to just out of my personal capital because I wanted to keep growing my business. And I look at every opportunity that's a new loan that we want to do as an opportunity to grow because we continue to just get introduced to somebody else every time we do a loan. So I put up a lot of my personal capital through that point where some people were waiting on these deals until the stock market crashed. But now that things have gotten a little more volatile, real estate's getting a little more tricky. I think most people have taken their foot off the gas a little bit. It's not that hard now for us to go to these investors. Most of them are waiting and willing to do it. A lot of them cashed out, took some chips off the table and have cash sitting around. So it helps.
Awesome.
So I guess with your contacts, this is kind of diving in the weeds. Was it agents you were reaching out to, I'm guessing, versus the players themselves? Or like, how did that start? And because I'm guessing that trying to get the players' contact information is probably a lot more tougher, where the agents are more of a firm that you probably could reach out to. Just curious how that process went.
Yeah, I'd say our clients more so are those agents and business managers because they're the ones who really make that decision. Like, oh, you need a loan. This player is not going to say, I have these contacts. The business manager is going to say, I have these contacts. Here's who you're going to call. So they're really who we treat with really like that white glove service is those agents and those business managers. And that's who initially, we got our foot in the door with to start sending those referrals over. And now we get various requests. We'll get players that call us directly now just because we're a little bit more known. Or this agent who's not even my agent said that you helped a player with a similar circumstance. Can you help me out? So I'd say 90% of the time we're dealing directly with, or the majority with, the agent, business manager, or something of that effect, financial advisor. And we deal with the player when we need to talk through something specific or get them to sign something. And then the other 10% is, we deal with the player directly. And some players are more involved. We have one music artist that she don't even talk to my business manager. I'm going to handle everything directly with you. And she likes to work that way. And yeah, so it really just depends. But we're willing to work with our clients however best suits their needs, right?
So this is kind of going back to like you leaving private banking and going this route. Again, my mind is still blown. Huge extrovert here. So I'm still like stuck on this, like, wow, 9 months of cold calling, 9 to 12 months, full year. Was there ever a point where you're like, again, being a parent, working private banking, doing this for that long, was there ever a point where you're like, does this make sense? Do I need to pivot? Should I quit this side project? Did you ever have doubts?
I still have those doubts. I mean, I was actually talking with my wife about this today. I'm like, I need to remove this from my mind. It's like a doomsday mentality. And like what drove me to work hard in the first place. Like I had a modest upbringing, right? My parents didn't really have a lot of money, let's say, growing up. And I was always like, I'm going to make a lot of money. That was going to be my goal. And I have this mentality of like, hey, if you don't keep making money, you're going to go broke or your business is going to crumble. And I think that's what drove me with the cold calling and everything. Once I figured out that as long as I keep pushing the envelope or keeping my nose to the grindstone, I'm going to have success. So yeah, there's, to get specific, I guess there was probably, I don't know, when I had my banking job, I was 100% like, this is awesome. I'm collecting checks and I have this other job. Like this is going to work.
Yeah.
I have no doubts. Right. And then you quit your job. And the second I handed my resignation, I'm like, shoot, like month 2 and month 3, I can see what that income's going to look like. And I can see what loans we're going to close.
Yep.
But I really don't know what for that, which had always been the case. What's kind of happening this quarter. You may have a couple ideas like, oh, that loan's going to happen later in the year, but you still kind of have this underlying paycheck or that comfort of working for somebody. And once that was removed, every time I didn't know what was coming in like month 3, I would start worrying, like, what if people stop calling? And over time, I've gotten more comfortable with, okay, like you can rest a little easier now. Yeah, people are going to keep calling. It hasn't, we haven't had a month now where we haven't closed the loan. That being said, I think people mistake volatility for risk. Right. So I think a lot of people are like, oh, well, I can't quit my job. What if I don't make any money that month? Well, that's fine. But what if you make 3 times the amount you would have made at your old job the next month? And that's volatility. And over time, over the last however many years, month to month, it may be a little volatile, but financially or income wise, I'm doing a lot better even than I was as a private banker. And so that gives me comfort. I have a bigger, financial cushion now than I did 3 years ago. So I have some peace of mind in that aspect. But I think those doubts, as long as you're trying to grow your business, as long as you're actually pushing yourself to maximize or reach your potential, I think you're probably going to have a little bit of those doubts, and you just try to turn them off. And
what do you do to, like, you personally, like, what do you do when those doubts, because again, most people who are starting a new business or diving into investing for the first time or looking at investing or doing something different outside like that rat race or hamster wheel or, mainstream, are going to have those doubts. What do you do when those doubts creep in? Like what keeps you back?
Yeah. I mean, there's a couple different things. I mean, I guess there's a handful of different things. One is when there's a really big fear or like goal that I have, but I'm really afraid of, like, hey, I know that I'm going to start making excuses in my mind and try not to achieve that thing because it's scary. I will write that thing down and it'll say very affirmatively, I will do X, Y, and Z. That's what I did when I was starting the business. I knew the comfort of my banking job was always going to be there. Maybe I want to push hard enough. So I wrote, I will be a successful lender to athletes and entertainers and start the business A Lending Solutions. So I put it up right next to my desk. And every day I would say it to myself. And I think people in general think that I'm a pretty confident person, but the internal talk in your head sometimes just can run amok, right? And these things that sometimes people will say, well, this isn't an excuse. This is what's happening to me in life. I try to be really cognizant of the fact that it may just be an excuse. Like, I don't want to work out this morning. My kids were crying last night or whatever it is, but I said I'm going to be healthy and I said I'm going to work out. I have to go do it.
Yep.
And that's the same thing, same approach I took with the business was, I'm going to write this down. Hey, I said 6 months ago, I will accomplish this. I'm going to do it. Even though I'm not seeing results, even though it's not happening, keep doing that. The other is reflecting on where I've been. So I try to keep a lot of detailed notes as to when I was starting the business, I was writing everything down. Talk to this person, he told me to kick rocks. Talk to this person, this was a positive note. I got this paycheck and I'm, from somebody else that we did a loan for. And I remember like, I'll look back and read those things and I look how excited I was to make $5,000 off one loan that month.
Yeah.
And, like this month that I'm having really isn't that bad, right?
Yeah.
The fact that no one's called me in 3 days with a new loan isn't that big of a deal. And I've got to self-talk myself and tell it to my wife and have her remind me that I'm being a baby and worrying for nothing and give me a kick in the butt. So
nice.
That's probably it. That and blowing off steam, right? I mean, if I'm like having a bad day, I'm like, what can I go do to like get out of this mental funk?
Yeah,
and
for
just
sure.
know that, that there's like a common phrase, right? This too shall pass. Whatever it is you're going through, however difficult that day is, however much you don't feel like working, like it's going to pass. And tomorrow I'll probably feel a different way. The day after, the week after, who knows?
Yeah, I think that's a good mindset for anyone who is starting their own thing is this too shall pass, but also knowing that really making sure you're reflecting on the wins that you have and remembering those wins, because when you're in it, you're like, this is amazing. But then that's like you move the benchmark and you're like, oh, that's actually not that amazing. But at the time it's like you have to remember that feeling of what it felt like to get your first, like I'm sure for you, for example, the first payment on a loan that you closed. And
I actually have it right here on the board.
That's awesome. So I think that mindset really comes into it like a big part with a lot of people who are either entrepreneurs, starting their own business, taking a risk or leap into a new business venture. So it's good to hear like those tips and tricks that you do to kind of keep yourself moving forward. And I know when you are starting a new business, for example, you're not just the strategist that knows how to do the actual business, but you're, like you said, the salesperson. You're calling, you're cold calling, and that is just a mental game in and of itself. So awesome.
Right. That's something too with poker. We say it's the highest highs when you're winning money and the lowest of lows when you're losing money. There's times when during poker, I'm like, what am I doing? Do I even know how to play this game anymore? Because there's so much variance in it, because sometimes luck plays a factor. And so I think luckily I had some training in that early on of managing my emotions.
Yeah.
But again, everybody is going to have those doubts. Don't lie to yourself. Be honest with yourself. Are you actually working as hard as you say you are, or as hard as you think you are?
Yeah.
If you're not getting the results. Yeah. Maybe I'm not working that hard. Maybe I need to get back on the grind.
Yeah. So kind of to like wrap this all up and bring it to a close, like two things, if you could give someone a piece of advice who is looking to take a leap and start something new in their investment journey, or kind of stepping away from like mainstream building wealth or investing, what would your advice be? And then the second is like, how can people who say are interested in learning more about how maybe they can do a loan with you, how would they get in contact with you?
Sure. So the first part, I would say one would be write things down, write down what your intentions are that day, because the motivation is fleeting. So write down so you can revisit it and say, hey, you know what? I said I was going to do this. Let me take those action steps. And taking action is the most important thing, right? Like I'm not some genius. Anybody with a background in lending probably could have done what I did, but I kept taking those action steps day after day after day until I built the business. And with most people, I think, that's another hard part is taking those steps. And ideas are a dime a dozen, but to actually take the action over and over, day in and day out, till you build something or get to that point where you've built it, is a big deal. So that's would be the takeaway, I'd say, when you're starting your own venture. And then how can people get in contact with us? And you can go to our website, which is aelendingsolutions.com. There's a contact us form on there, or you can email me directly. It's adam.gamboa@aelendingsolutions.com. You can reach out, and we have somewhat of a fairly simple vetting system. If the person wasn't referred to us directly by somebody we know, if somebody wants to invest, we'd ask them general questions about their background. We'd probably make them sign a formal document that says, hey, we deal with really sensitive information. You may be privy to some of it. We need to sign a non-disclosure on each deal we have. But if people reach out, we're always happy to talk to them, and we're always looking for new investors, because we have investors that like this type of loan at this rate. We have investors that only like it if it's 15% plus. We have investors that only like to do MLB players. It really just depends. So everybody's
Super
got their
specific.
we've got really, really specific requests. So it helps to have a big pool of people we can go to.
Awesome. Well, Chris, any final thoughts?
I enjoy listening to this, and similar to, I'd say, a lot of the recent podcasts we've had where people coming on who, have been able to be entrepreneurial, but also kind of create and build their own wealth. Consistent theme is, like you mentioned, most of us aren't different than anybody else except for day-to-day activities of consistency and continuing to move forward. And when you take a step back, just, next day, make sure you're still trying to take 2 steps forward. So that's a constant theme that we've been hearing.
Yeah. I'll add to that is something that keeps popping up is like motivation is fleeting. Consistency is like what you can control. So like you may be super motivated to be healthy and go to the gym, but like the next day you may not be. So it's just about taking that consistent action, getting up, getting yourself to the gym, getting yourself outside to go on a run. So focusing on that consistency. And with that,
there's always going to be days where you don't want to do the work. You just got to show up and do something, even if it's a small victory. Just keep taking steps.
Yeah.
It all compounds.
Awesome. Well, thank you so much, Adam, for joining us today on.
Thank you for having me.
Yeah. So thanks for joining us on this episode of the CWS podcast. If you guys enjoyed the show, please share it with a friend, subscribe, or leave us a review. Until next time, thanks, guys.
Thank you.
Thank you all.
Thank you for joining Lauren and I on this episode of the Creating Wealth Simplified podcast. Each week, we bring you expert education, experience, and information in a digestible format to help you identify investment opportunities so you can build wealth through real estate and take action toward your financial goals. Enjoy the show, share with a friend, or subscribe to the show and leave us a review.